when the market sold off hard this morning, the Dow was way down here. Had it stayed down here, we would have had a bearish Harami, bullish day. Bearish Harami, still showing selling, bullish day. Bullish day followed by an indecisive day. The third day, closing down here more than halfway down this candle, would have been a bearish evening star signal and a close below the T-line, which would probably have started a strong downtrend. However, the fact that they closed it back up above the T-line today is a good indication that the bears are still in control. The bulls haven't come, the bulls are in control. The bears have not come in and taken control yet. Stochastics very level. I mean, they're slightly down, but all that is this flattening out period. As long as the trades or the indexes close above the T-line, you have to consider we're in an uptrend. We're not in a downtrend yet. However, we do have sell signals here. This market will move in the direction of how they open it tomorrow. If they open it lower, that's going to be confirming this kind of hanging man doji type signal, which tells you that they've given up the ghost, that they're going to start rolling things over. On the other hand, if they open it and we wake up with the pre-market futures showing higher, that tells you they're still staying above the T-line. You continue to hold your long positions, but in this market condition, it's not a bad idea to have a few shorts in your portfolio. The NASDAQ did do a doji. Again, the rule of the doji is they're going to move the direction based upon how they open after a doji. So a positive open would make this a good little congestion area, and they could be starting the next wave to the upside. The longer this slow uptrend stays in progress, the more these patterns start working. Notice the big belt hold signal in MLNX, then a morning star signal, a close above the T-line, and it hasn't been able to close back below the T-line. This one is still in the process of doing an uptrend that could take you up here to the 50-day moving average very quickly. Patterns like the J-hook pattern is now working effectively for the airlines. Here's Delta Airlines doing a nice J-hook. This one can be bought on positive trading, provided there's no severe change in the market direction. And DV is a perfect example of why we want the patterns to work out. Fry pan bottom, breakout. That's what we're looking for. That's what these type of patterns illustrate, where there's a strong change or a buildup of buying pressure. Do they always pop up big like this? Not necessarily. We're always hoping for a big, strong uptrend. But being in the right place at the right time is one of the prominent aspects of candlestick analysis, where we know the buying pressure is starting, where you can either get a big pop like this or hopefully a strong, profitable move. That'll be it. We'll see you in the chat rooms.